What's up, guys, and welcome back to Roguefx. Today we're going over our beginner phase, essentially our dot method, but most definitely our conscious introductory phase, really kind of introducing the overall fundamentals to developing a range, in whichever case, a systematic trading system based on range-based trading. We will be essentially using two dots, maybe a trend line for, of course, liquidity, as well as an inducement, as well as a liquidity pool, box, square, rectangle for our point of interest, right? I believe this is going to be the third video within this series. I do appreciate every one of you guys for tuning in. I do appreciate every one of you guys for continuing to develop in your trading systems, continuing to develop in your individual journeys, my friends. It is very much commendable. You are very much in the right place. If you haven't already, hit that like button and definitely subscribe to the channel. We do aim to post consistently. I very much am, or in whichever case, I very much do provide members only videos or as well as content, very much exclusive material from exclusive gems, as well as very much trading concepts to our market maker mastery class. Essentially 2 videos a week of me going over essentially different setups that are very much unique within themselves. However, I will be presenting the first phase, second phase, and third phase just based off of very much what's being presented within market structure and price action, really kind of training your eyes to really see what's actually going on within the markets and really kind of being able to print, or I should say, embed this very skill set or very much trading system within your retinal activating system. It's like playing a video game and understanding the controls as well as the patterns of, we'll call it the obstacles that are very much in our way to establishing or really kind of getting towards or closer to our, goals, of course. This is essentially the Rougefx trading system amelioration, right? We also have a signals chat as well as a signals service, so you can very much earn as well as really kind of learn how to very much embody this system, embody this skill set within your very lives, and of course, very much create generational wealth for your families. I do appreciate every one of you for tuning in. I thank God for, being able to, be here and be present and very much continue my work, continue to develop within my system as well as helping you develop within yours, and again, get further along in your trading journey and very much continue to persevere, just like anything, doing any kind of skill, playing a video game, going to work, essentially, right? It's all going to require forward movement. It's going to require very much perseverance, right? Without further ado, let's very much get started. So very much understanding our range, it's important to understand that price essentially establishes a weak high as well as a protected low. How do you know this high is weak? Not only did it not take out, in whichever case, a previous high, but I mean, obviously in like the, in whichever case, looking further towards the left, but essentially we very much rated a weak high, right? Essentially, right? Just to make it that much more simple in terms of really kind of understanding your range. We have a 3 candle formation, essentially a declination in price, reaching for internal range liquidity, which in this case would very much end up being what? A significant slanted low, right? Intentionally, very much dipping into a significant pool of liquidity within this obviously bullish rejection block, right? Essentially redefining this to a rebalancing mechanism. If I very much take my fib and measure our overall point of interest, we have a significant, let me see. Yes, we have a tick, so essentially a liquidity grab, right? So this is an opportunity for a long entry in whichever case. We could very much take this setup, respect our stops as well as our Fibonacci levels, target our external range liquidity or essentially our emergency exit being a 3 candle formation, and this is going to close off at a 1 to 5. Give me a second to very much clean up our charts as this is very much essential. Moving on to our next range, we very much have a protected high, and essentially, if I'm being very honest, we have a liquidity gap being taken place right here towards the lows, as well as a liquidity gap being taken place towards the highs. Essentially, it's important to understand that this is ultimately going to be a weak low simply because we're comparing it to a previous weak low. So really kind of understand how that kind of essentially correlates to the market structure and price action being essentially fractal, right? Understanding that price very much took out a set of buy stops in whichever case, very much a 3 candle formation. We can even call it maybe an equal high based off of this previous week high. All in all, it's very much taking out liquidity, establishing this as a protected low. This is generally it's a protected low. However, it's important to very much understand what's essentially going on as far as our price action being presented right here. For whichever case, we have a bearish rejection block, we have a liquidation, or essentially a reach into a significant pull of liquidity towards the left and then continuation towards the highs. At this point, we are being presented with an imbalanced close price action and a rebalancing mechanism. Really kind of understanding this helps you understand that, well, this is essentially going to be an overall point of interest, right? This very much point of interest is going to be very much essentially magnetized towards, right? So it's essentially really kind of understanding market structure as far as the market cycle or the range cycle. We are essentially understanding that liquidity grabs very much magnetized towards mitigation sequences, establishing this as a significant point of interest, correct? At this point, it's fairly simple to understand why price essentially stopped on a dime right here. Yeah, apologies, that was very much my grandmother. It's all good. Very much understanding why, again, price stopped on a dime right here and then obviously targeted the overall slanted highs that are eventually going to be a weak high, essentially, right? So essentially, I'm very much moving ahead of myself. However, it is very much important to really kind of understand the direct entries as well as the confirmation entries that are very much being presented. In whichever case, we have essentially a rebalancing mechanism, maybe, yeah, definitely rebalancing mechanism being very much essentially mitigated from this point of interest. And it can act as a mitigation most definitely, but as a rebalancing mechanism, it's important to understand that we're essentially taking out internal range liquidity regardless of what it may look like. Essentially, weak highs are definitely being liquidated before the actual continuation towards the lows. So, I mean, to really kind of understand the utmost of opportunity presented within this particular range, it really helps you understand the really kind of the abundance that very much come with understanding the skill set to a significant level. Actually, very much give me time to very much clean this up. As you know, the cleaner the charts, the cleaner your mind in whichever case. I really hope you guys can understand that. As you can see, understanding our range for in whichever case, we have a protected low, weak high. We are very much coming off of two significant trade opportunities that, obviously led to a declination within price, very much reaching for very much internal range liquidity. It's going to end up acting as like a slanted or equal low, whichever case. However, we very much went a significant amount, further than that in whichever case. You could have very much took a partial and maybe taken this as well. However, in this case, why did price stop right here? Essentially, we have a significant, in whichever case, we have an unmitigated wick that kind of acts as more times than not, it's very much going to act as a rebalancing mechanism, of course, in whichever case, redefining our point of interest toward a, we'll call it an imbalanced close price action, simply because, as you can see, we have a significant shift in momentum, right? So essentially, we're going from a rebalancing mechanism that price reached or dipped further into liquidity and really kind of tapped into our imbalanced close price action inefficiency, point of interest, or mitigation sequence in whatever case. Essentially leading price to, again, slanted highs, another type of liquidity. We also have a 3 candle formation, right, in order to really kind of understand liquidity at its fullest extent in whichever case, right? We can very much target that high. This is really understanding that, guys, you don't need the highest risk reward opportunity, a 1 to 5, 1 to 3, 1 to, these are very much pretty significant trade opportunities to very much target and essentially, reach for, or in whichever case, these are the type of opportunities that should very much, pique your interest in whichever case. I really hope that makes sense. We very much have a weak low developing, essentially, obviously comparing this to our previous low, as well as a protected high, right? Essentially, again, we're working with another half turn, right? I know it's going to be kind of confusing simply because, again, we're taking out liquidity towards the left. And as you can see, price didn't necessarily go anywhere as far as, continuing towards, essentially, maybe we'll call this a slanted low, 3 candle formation for external range liquidity. But I can very much explain why here in a second, right? So essentially, we have a protected as well as a weak. This is helping you very much understand that essentially this, in retrospect, it's not going to be essentially a weak low. It is a weak low most definitely, but if we're coming from maybe the 3-minute and we're trading towards the highs, this is now a protected low. You see the fractal nature that can really not necessarily get people confused, but really kind of distort their minds, not understanding that, guys, there's liquidity at literally every high and low. In whichever case, When you understand that, at this point, it's understanding, okay, what's our next type of liquidity that is essentially going to establish this as our protected low, newly found protected low, of course, because again, price is not breaking towards the lows, price is essentially holding in whichever case. What would be our next type of liquidity that we can very much reach for that is essentially not so essentially far from our reach as far as a take profit? Well, we essentially have an imbalanced close price action, right? So this imbalanced close price action could be acted as a significant, we'll call it an inducement, right? Essentially, this is going to be the inducement, but of course, if you understand an imbalance and what that means for as far as liquidity, you understand that needs to be filled in order to rebalance price, in whichever case, the market, right? Really understanding this is understanding that, well, what we're really working here as far as a range, in whichever case, we're working in whichever case with a half trend, in whichever case, giving us a significant or plethora of opportunity. Essentially, we're looking at quantity over quality. In this case, we are very much looking for liquidity grabs. Liquidity grabs. Liquidity grabs. Liquidity grabs. Now, this is just understanding price action from experience. You're going to have to very much study and very much hindsight backtest this, and a third, of course, simply because that's what this skill set calls for, right? However, when you have it understood, it's simply just something to do. Not necessarily. This very much it calls for a significant amount of effort to be very much in place, or in whichever case. However, it is very much it's good to understand that after a while, it's just a part of the game. You know, the losses that very much can come with it. I say can because a lot of the times when you very much, you've done the work and you're very much, healed to a certain extent to where you can very much take a loss and very much learn from your losses and very much grow to appreciate your losses over time. You grow to very much understand that your losses are simply a part of the process, and if studied, if really kind of taken seriously, if very much noted down via maybe a Notion workspace or workplace, in whichever case, at this point you're doing research on the markets. At this point you're studying your actual trading processes, in whichever case. At this point, trading becomes less about, essentially getting over the market and working with the market to develop and really kind of see continual progress. And I'm not saying throughout, maybe a week of trading or maybe a month of trading. I'm saying throughout the quarters, throughout the year. I'm talking, how do you compare yourself from January to August to December? You see what I'm saying? At this point, we're thinking long term. At this point, we're very much developing ourselves, our minds, and our way of thinking, not only about life, but definitely about, trading. Not only about trading, but definitely about the world around us and essentially about money, right? As you can see, we have yet another type of liquidity, a 3 candle formation, acting just before this protected high, very much continuing towards the lows. At this point, my friends, I'm not just making this up. I just want you to understand that, there's a plethora of opportunity that's very much being presented if, you put in the work, and you can very much understand that, well, this is what happens when you very much follow and trust the process, right? We very much have a significant amount of trade opportunities very much presented. And I'm not saying this to very much have you essentially feel like you can just do anything in the market and you're untouchable. That's not the cause of this video, I promise you. However, it's important to very much understand and realize that really all you need is one of these trades, whether it be a 1 to 6, 1 to 5, 1 to 5, 1 to 8, 1 to 8, one of these trades to bring back a significant income. In whichever case, bring home a significant income regularly throughout the week. Obviously, really kind of compounding your personal wealth, really kind of understanding that, well, money is but a tool. And when that understanding, you can very much understand that, if I'm being honest, financial literature is the only thing stopping a lot of people from becoming successful. That's just something I did feel like I need to very much say. In whichever case, I do understand, and I very much see this generation of individuals coming and going out of high school as well as college, really kind of taking a liking to trading, taking a liking to this skill set, and very much developing it over time, right? I'm talking way past me, right? This is just the foundation. This is the setup. But imagine me maybe 20 years from now, I'm hanging out with my family. I'm really kind of just understanding myself to a certain degree or 3, and I'm away from trading. I've done what I needed to do. I've instilled my mark, and at this point I'm kind of just chilling, enjoying my life in whichever case, God willing. at this point, I want to see what you guys can do. I want to see what you guys can develop within your trading. To an extent, a lot of people, I mean, imagine for the person that says, oh, well, I like this way of trading. Okay, well, we have one, two, three, we'll call it three white soldiers or whoever case may be, only means that, well, this is a cluster of essentially higher lows. Well, the cluster of higher lows was before that a protected low. Well, that must be liquidity. Trading, simple as that. Let's go ahead and very much take our trade and just understanding where liquidity is, this protected low, literally just above this protected low. At that point, that's a trade for you. And yes, trading can be very much that simple because in whichever case may be, it's still giving our same setup. We have a weak high, we have a protected low, we have unmitigated wick. Better yet, we have the body of our protected low, essentially our bullish rejection block. Understanding where liquidity is, our point of interest, our overall range. This is a fairly significant entry, and you very much have what? A trend line to really kind of validate your efforts. You know, and I don't necessarily preach trend lines too much because I want you guys to understand market structure, point of view, really kind of in your face, understand price action point of view in your face, simply because these trend lines, they're our highest form of confluence and it's easy to build confidence off of them, but I don't want you guys to depend on it simply because you should already kind of understand to a certain degree or two how markets move, right? We already know that trend lines are 90% stronger, than a horizontal line. It's just something you know. Therefore, I mean, it's something that like should be essentially second nature to know right now or any kind of time, right? Simply because, guys, what's actually happening within market structure? Creating lower highs, lower highs, lower highs, lower highs, equating to what? Bearish trend line. Fairly simple, you know? I'm a firm believer that trading is as simple as you make it in whichever case. So, like I said, like the sky is the limit for individuals who very much can understand that, I mean, this is one, not going to be given to you. This is two, it should be respected. It should very much be taken serious. It should very much be essentially like, it's not a hobby, my friends. It's a lifestyle. When you understand it's a lifestyle, you understand that it takes more than opening a chart and really kind of depicting essentially where your high or where your low is. It's more so about, you know, becoming balanced within your essentially your life, my friends, and really kind of understanding that, I mean, in whichever case, God has to become a factor. In whichever case, your spirituality, as far as, you know, keeping a healthy spirit, has to become essentially a responsibility of yours. It comes with a lot, but to an extent it doesn't, because it's like understanding, oh, well, what if you end up becoming a professional basketball or football player? It's going to come with the same things. You're going to have to practice really keeping a healthy spirit. You're going to have to practice keeping your emotions as well as your mental in check. These are things that come with financial freedom. So you're essentially developing yourself to understand and really kind of dwell within this, essentially this lifestyle that you are essentially pursuing by trading, right? I here's the thing. I don't believe anyone's scared to trade. I don't believe anyone's intimidated by what I'm doing. I feel like the information isn't necessarily out yet simply because the public isn't ready for it. However, when the public becomes ready for this, understand the children will have this first and they will take off with it simply because I'm saying they will and I'm saying they should. There's nothing in this essentially these markets that you should be afraid of. It's other than giving up, other than being a quitter, other than essentially letting life kind of dictate what you're going to do with it, you know, how you're going to react towards it, you know, essentially just understanding that you have freedom and it needs to be exercised on the daily. I just really hope you guys understand that. Enough of that rant though, most definitely. We have a protected high, we have a weak low. Did this low manage to break a previous low? Of course not. It only really kind of insinuates that we have lower prices that we can very much aim for. Fairly simple. We have a protected high. What makes this high protected? Well, we're essentially reaching for internal range liquidity, right? What does this mean, right? Internal range liquidity. Well, essentially, if I take my point of interest and measure my overall, we'll call it a bearish rejection block, okay? At this point, we have a liquidity grab. Essentially, we are dipping into this premium pricing pool of liquidity. I can very much locate or illustrated right now. This is a pull of liquidity. Price is very much dipping into. Price continues towards the lows. We end up failing to break a previous low. Retest, taking out internal range liquidity, being what? We'll call it the 50. Fair value equilibrium, reaching for, again, internal range liquidity. Most definitely, though, we very much have a weak high up here that we can very much reach for, essentially helping you avoid probably a stop loss hunt for real. That is a significant point of interest that we can very much use. Respecting our Fibonacci, of course, as well as, obviously taking this down towards our weak low. Understanding that, guys, a lot of the times, if you see that there might be liquidity below here, it's probably a fact. As well as, we have two lows that are very much weak, essentially, right? So it's going to act as what? Probably a slanted low, right? The whole thing, really, if I'm being honest, and we can really go over this right now, we have a left shoulder, head, as well as a right shoulder. This right shoulder automatically ends up our inducement simply because this is our protected low. If this is our protected low, what does that make this low? Liquidity. It's a weak low. Protected, weak. You see what I'm saying? At that point, you're really kind of understanding price action as well as market structure at a significant level simply because, it's right in front of your face, my friends. It only takes studying at this point. So again, those who are very much putting in the work and understanding that, this is a thing now. And, a lot of people are very much going to become, top tier as far as, bringing wealth to their families, as far as understanding financial literature and understanding how to essentially invest, right? Because that's the only thing that's missing in this economic system, right? Essentially, how do we invest? How do we invest consciously? How do we invest intentionally in whichever case? Well, this is a form of it, right? Understanding that this is essentially going to be our most premium point of interest. Well, in that case, this kind of makes this our least premium point of interest, essentially establishing this as a imbalanced close price action. Inefficiency, essentially helping us understand not only a confirmation entry, but most definitely a significant trend line that's essentially very much taking place from our previous inducement in whichever case. Understanding this, we have a plethora of opportunity to really kind of essentially test this trend line for a significant amount of resistance. We have really for the last opportunity and most high probable opportunity, we have an internal range liquidation of course, a 3 candle formation, maybe even a weak high, as well as a unmitigated wick for a significant point of interest in whichever case, right? Simply the transfer of we'll call it money, we'll call it orders. Most definitely, though, it's just transferring the volume within our point of interest to the nearest candlestick with the highest amount of volume. That's all it literally is. How much volume is in this candle at the moment? That's where the liquidity is. That's where the liquidity is essentially located as far as, in this case, buy stops, as well as understanding that, well, this is a significant area for what? A liquidity grab, right? Essentially, right? Just kind of measuring our point of interest with our fib. Let me go ahead and clean this up a little bit and very much help you guys understand that, well, this is yet another significant point of interest. Put our stop above 2 previous highs, essentially, really kind of understanding that, at times we could have an extra liquidity grab, essentially, right? There's nothing that's not, probable within this market. So, nothing guaranteed, but also nothing that's essentially going to very much, keep you from, again, learning and really kind of understanding, reevaluating, reconfiguring your system, right? Continuing towards the lows, of course. And, obviously external range liquidity, essentially giving us an expansion, right? Very much continuing this overall leg towards the lower pricing. At this point, my friends, our overall view of the markets has essentially been rebalanced. At this point, it is time to continue our previous leg, right? Essentially, toward higher pricing. Essentially, here, look, hold this, hold that real quick. And I'm going to use there we are. Now, at this point, this is kind of helping us understand where we have to look forward to as far as a particular expansion towards the highs. If you don't know what I did, I simply just took our correction, essentially, right? We have a weak high with some extra, we'll call it just, essentially excess and price movement, right? But we'll kind of consider it in this case. And then we'll take, maybe we have a 3 candle formation, right? However, we very much have an opportunity for a essentially this bulk of consolidation going to act as a significant area where buy stops as well as sell stops were very much formed. We'll take half of that in whichever case. Again, we'll replace this with this, understanding that we very much have not only a 3 candle formation to maybe very much reach for, but also maybe in whichever case 60 pips after that, right? And now this is not necessarily saying, oh, you're just putting random things on the chart to really kind of make yourself look good or look better than you really are. I might be. I really don't care. At this point, though, it's understanding that using essentially your mind to really kind of create opportunity for yourself is really understanding that, well, if price can essentially go 131 pips, right? Then essentially price can go 131 more pips is what I'm saying, right? And this is not necessarily saying, oh, well, duh, right? This is a, what you call it, a fractal market with, essentially 2 legs on each half of a correction. However, it's important to very much understand that in order for the market to balance itself out, it very much needs to consider both the correction as well as the expansion, right? What does this mean? This very much means that the only reason that you're not necessarily profitable is because your system isn't necessarily in check. Whichever case, I do appreciate all of you for tuning in. I do appreciate all the love and support, everyone who leaves that like button. I do, again, offer membership services from Signals to Signals Chat to Market Maker Mastery to different concepts as well as gems to actual value, right? Through words. Like, these are words. These are teaching you how to use the internet, how to develop on the internet, not to have 100 followers. No, how to protect yourself on the internet, right? So in whichever case, guys, I do encourage you to take on my membership. If you don't, that's fine. I will very much continue to post publicly. It won't be, as exclusive content, but I mean, in this case, it's not necessarily in this case, it's not necessary for me to very much post, regular content because essentially it's already there. That's I guess the easiest way I can put it. What you need to become a significant trader within these markets is already there. Now, for those who are very much continuously getting better and really kind of understanding these markets more and more along with me, I encourage you to take the members only. It's not too much, and if you are very much invested, you will invest in whichever case, however that means to you. I do appreciate every one of you for tuning in. Until next time on Jody FX,